Hello and welcome everyone to Managing VAT for Global Expansions. My name is Regina and I'll be your host for today's webinar. Today we'll be covering understanding VAT registration and compliance frameworks, implementing digital tools like OSS, IOSS, and e-invoicing to streamline operations, addressing regional VAT challenges, including new platform economy regulations, developing strategies to manage evolving VAT requirements and business growth, and preparing for the phased implementation of EU ViDA reforms starting in 2025. Before we dive in, just a couple of housekeeping items. Just a friendly reminder that Avalara cannot provide legal tax advice, but we will answer as best we can. On your screen is our safe harbor policy. Please take a moment to review while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be customized. Feel free to move or resize the windows. Slides can be resized by dragging the bottom corner or by downloading the PDF slide deck under Additional Resources. The Additional Resources section contains related resources, including the slide deck. There are several ways to engage with presenters and attendees. First, if you have any questions, please submit them using the Ask a Question box. We will try to save time at the end for Q&A. You may also submit webinar troubleshooting questions there. Second, you can join our attendee chat. Click the icon at the bottom of your screen with two chat bubbles. The attendee chat will then appear. We encourage you to introduce yourself, network, and discuss today's topic. Third, you can react to the presentation by clicking on the emoji icon and reacting. If you have any technical issues, there's a question mark icon at the box, or reach out using the Ask a Question box. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit today, please note that we will ask you to respond to three of our four poll questions. The poll question will pop up on your screen for a limited amount of time, so please be sure you're ready to answer when the question appears. Please do not split or tile screens on your computer, as this can affect the placement of the poll question. The webinar platform may not render correctly on mobile, so please try to get to a desktop. You must also attend the full 50-minute duration. Once you have met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. Click the icon to access. It will open up in a new tab, and your certificate will also be sent in a post-event email. Unfortunately, we're unable to provide CPE credit for those who have technology issues that prevent them from qualifying. If you do experience an issue, please reach out as soon as possible so we can document the issue. If you have a moment, please respond to the survey questions on your screen or following the webinar. Now let's meet our presenters. We have two presenters from Avalara, Henry Dearlove and also Will Colburn. Henry, can you tell us a little bit about yourself?
Yeah, hi everyone, and thanks for joining. So I'm Henry. I work in the solutions consulting team at Avalara, based in the UK. My role is to help customers and the future customers understand how to get the most of Avalara's products and ensure that they're compliant and get in the areas that matter most to them in their business. So a bit about me: I've been working in indirect tax and finance for about 10 years. Before this, I was working like a professional services firm, kind of implementing various like tax technology products and just general indirect tax consulting, mainly in the financial services sector. And happy to be here today to highlight some of the trends and issues we've kind of identified and talk a bit about how managing that for global expansion.
All right. And Will, can you tell us a little bit about yourself?
Yeah, thanks. Hi, everyone. My name is Will Colburn, and I'm a Senior Product Manager here at Avalara. I've been at Avalara for 5 years now, focusing mainly on the VAT returns space. However, as we are going to be covering today in the webinar, we're going to be looking at how we can create that platform and compliance across all of the different stages of the compliance journey. I work at Avalara between the engineering teams to ensure that we have our roadmap aligned, working with customers to ensure that we can deliver the value and ensure our customers remain compliant, and how all of our products can work together to create a connected product suite.
All right, thank you both for being here today. I'm going to pass it over to Henry to get us started with today's presentation.
Yeah, brilliant. Thank you, Regina. So today we've got quite a jam-packed agenda. So we're going to kind of talk about VAT, so value added tax on a global scale. And then we're going to kind of move into Will, who mentions and talk a bit about the technology side of things. So just kind of first of all, I think we all know, we're all here, VAT is a complex tax. It goes far beyond simply charging it and paying it to tax authorities. There are multiple layers of compliance and range of different frameworks that businesses need to navigate when they're thinking about VAT. So in this session, I'm going to look at what it really means to be VAT registered, what questions businesses need to ask themselves before registering, and then once they are registered, what they need to be doing to stay compliant. I'll also highlight some of the key changes shaping the VAT landscape. And as Regina mentioned, this is particularly within Europe and ViDA. So ViDA is VAT in the digital age. And also more broadly, the kind of key topic at the moment that we're seeing is electronic invoicing, or e-invoicing, is kind of abbreviated. And like I mentioned, after that, Will is going to talk through how the right technology partner with a strong suite of solutions can support businesses in managing VAT as they expand internationally. So yeah, whether you're like a tax professional, business leader, or someone who just works across tax, finance, or operations, yeah, hoping this webinar gives you insight into the key areas of managing VAT for global expansion. So yeah, first of all, we're going to look at VAT registration and why it's more than just kind of filling out a form. And if you have any questions, please pop it in the Q&A chat. It's always kind of interesting to hear and kind of go throughout. We do have questions at the end, but yeah, feel free to kind of ask questions throughout, anything that's kind of unclear or anything you want some kind of like insight on. So first of all, understanding VAT registration. So let's start with the core concept of the VAT system, which is registration. So if you're familiar with US sales tax, which I imagine many of you are, just kind of think about the VAT as equivalent of needing to register for sales tax, like a permit when your business has nexus in a particular state. But when it comes to VAT, there is no single global standard, similar to like what we see in the US in terms of state registrations, but registrations rules vary from country to country. So the thresholds, the requirements and processes can differ significantly. So when you're thinking about VAT registration and kind of registration itself, there are questions you should be asking yourself as a business. So firstly, and I've kind of shown you on the screen there, these key kind of questions. So first of all, what are you selling? Is it products or is it services? So similar to like the US and sourcing rules, VAT is governed by what we kind of say is place of supply rules. And the different rules exist depending on what you sell. So VAT registration can differ depending on whether you sell goods or services. So for example, if you sell services, there may be like simplified registration schemes, such as like VAT on electronic services schemes that are kind of available in different countries. However, if your goods are over a certain value, so for example, within the EU, if your goods are over 150 euros, you may need to register directly in that country. So if we're understanding what you're selling, is it products, is it services, and yeah, what you're kind of selling. Secondly, where your customers are located. So this is key, knowing where your customers are located, so where you could have potential liabilities. Particularly important if your customers are based in the EU, so the EU being the European Union of 27 countries. So if you are, you'll need to comply with EU VAT laws and directives. So these go over and above the kind of standard VAT laws in that country. You also need to comply with EU VAT laws, so an extra area compliance. But yet again, you might be able to take advantage of simplified registration schemes. Thirdly, are you established in the country where you are selling? So what I think about that is a bit like physical nexus within the US. So for example, do you have a fixed place of business, like an office or warehouse, or do you hold stock or inventory within that particular country? So if you are established and you do meet those kind of rules, and it does vary from country to country, the registration rules will be different compared to like a distant seller. And as a result, like I mentioned again, and we'll go through this as well, there may be different VAT registration options available for you. And fourth, who are your customers? Are they B2C, so are they consumers, or are they B2B, so businesses? So for example, if you're a distance seller selling into the EU to B2C customers, there's a threshold of 10,000 euros. After that threshold, you must charge VAT in that customer's country. So how you wish to register will then depend on what is right for you and your business. Additionally, if you're selling to mainly VAT registered businesses, so B2B, in the EU, you may not need to register locally in each country, because in many cases there's something called the reverse charge, which means you kind of pass the burden of charging VAT onto your customer. So this means that the customer accounts for VAT and not you, and this is where I'll mention some of the EU VAT directives, and this is what we would call Article 194. So when it comes to VAT, particularly within the EU, it's important to understand the key articles of the EU VAT directive. And then finally, what are the different sales channels that you're currently using? So if you sell on marketplaces like Amazon or eBay, marketplace rules will apply. So obviously within the US, marketplaces are responsible for kind of collecting and remitting the sales tax. It's similar to like what we have here over in Europe. And so in some countries, these platforms can be considered deemed suppliers. So that's a really kind of key term, deemed suppliers, meaning that the marketplace, not you, so your business, becomes responsible for collecting and remitting the VAT, and that's over a certain value. So anything over £250, this is within the UK, you're responsible for collecting the VAT, not the marketplace. Yeah, so really kind of important for EU online marketplaces as well. And then I'm also just going to quickly touch on the notion of input VAT. So it's a really key part of VAT. So with VAT, you obviously have the output side of things. So when you're charging your customers VAT, you're collecting VAT, but also when you incur costs, you're incurring costs, so input VAT, which you can reclaim. Obviously within the US, you have the notion of kind of exemption certificates, and they're kind of used throughout the supply chain to kind of what we say zero rates those transactions, whereas VAT is collected and reclaimed at each stage of the supply chain. So that's really kind of key when understanding your registration options and what kind of area of compliance you want to kind of go down. Yeah, this brings up another question then really, is do you incur costs in a specific country where you're making your goods and provisioning your services? Therefore, if you want to reclaim VAT on the cost you incur, you must register for VAT in that country. But yet again, this may not suit your business and how you sell. And there's also specific EU VAT laws as well around the reclaiming of VAT if you're non-resident. So if you're a US business, you can reclaim input VAT through one of it's the 13th directive. So yet again, another directive to keep in mind of, but lots of different options. So as you can tell, understanding your kind of exposure and VAT registration requirements is not simple. It does require a real understanding of your business's supply chain, customers and processes. So the first kind of CPE question is if your business is managing, does have VAT kind of registrations and obligations, how is your business currently managing them and their requirements? So A, are you doing it in-house? So are you doing it yourself? B, have you outsourced it to like a professional service firm, accountant? Or C, not currently registered? So if everyone could vote away, that'd be great. Hopefully everyone's answered. Just kind of looking at the CPE the kind of new slide we're going to talk about now. So this is local VAT registration and its compliance frameworks. So to understand what is best for your business, it is also vital to understand the different VAT registration options available, and we'll run through these today just to give you an understanding. So who businesses trading globally. The first option, and it's one that probably springs up first to mind, and often seems like the only option available, is local VAT registration. So what I mean by local VAT registration is the process by which a business registers with the tax authority in a country to collect and remit VAT on taxable sales. but also in turn have the ability to reclaim VAT paid on business-related purchases. So this can apply to both locally established and non-established foreign businesses, depending on the nature of their operations and local VAT rules. But yeah, largely speaking, registration becomes mandatory once the business makes a taxable turnover exceeds a particular threshold or from the first point of sale. So local registration ultimately means that you'll be an established business or non-established in that case within that country, and you'll kind of abide by all the local VAT laws within that country. So it's almost like you're a fully registered business in that country. So just to highlight the difference, in Germany, there's no threshold for non-established businesses. So if you're a distant seller selling into Germany, for example, VAT registration is required from the first taxable sale. But in Australia, if you're a distant seller, your taxable turnover needs to kind of exceed 75,000 Australian dollars before you have to register for goods and sales tax or their equivalent of VAT. But then different rules will then change if you're like an established local business within that country. So back to Germany again, if you're registered as a domestic business, so you might have a warehouse or staff there, the threshold is 22,000, and within the UK it's 90,000 as well. So it does differ, and it's about understanding your company's footprint and where you're kind of located and where you may have an establishment. But yeah, just sticking on local VAT registration. Once you're registered, you must kind of follow all the local tax requirements and compliance frameworks in that country. And I've listed kind of 6 of them there. These are kind of the main ones. There are a lot more. But yeah, the most obvious one is the periodic VAT return. So you'll need to submit VAT returns on a regular basis. So whether that be monthly, quarterly, annually, depending on the local rules. There's also something called supplementary listings. This is particularly kind of prevalent within the European Union. So many countries are requiring businesses to submit additional returns. So this is particularly around like the details of cross-border transactions. So if you're selling from one EU country to another EU country and it's physical goods, you may need to fill in what we call intrastat returns. And there's also audit files as well. So something called standard audit files for tax, or SAFTs, are becoming more common. These require businesses to submit large volumes of accounting and tax data to the authorities, either annually or on demand. And there's also generic audit requirements as well. So maintaining VAT records for a set period, and also use of compliant software as well. So that's a really key part, is using software that is kind of aligned and accredited by the various tax authorities. There's also live reporting. So if you were to locally register, you may be subject to live reporting. So for example, in Spain, you must submit invoice data to the tax authorities within just 4 days of issuing that invoice. And these also must reconcile with your VAT returns. So real-time kind of submission is a big thing within the European Union. And it's kind of something to bear in mind if you are thinking about locally registering. And yeah, e-invoicing. So I'll explore a bit about this later, but it's currently the most significant global change impacting businesses. So yeah, moving beyond like your traditional PDF invoices to like true kind of like machine readable formats that are submitted and received electronically in real time. And also, if you choose to register within the EU member state, your business must not only comply with that country's local VAT rules, but also what I've mentioned before is the EU directives and regulations. So when I talk about the EU VAT directives, I'm referring to like a common set of rules that applies across all EU member states. So the main one is the Directive 2006/112, and this sets out the foundation of how VAT should be handled within the EU. So if you're thinking about registering locally within the EU country, it's not just about following the local country's laws, it's about being aware of the wider EU framework, because it impacts stuff like how VAT is applied cross-border, what information must appear in your invoices as well. But the key point here is that each country has its own VAT system, and EU directives make sure there's consistency, especially when trading across borders. So it's almost like you need to break out the EU 27 countries when it comes to looking at your VAT exposure. Yeah, so this is the different options for VAT registration. So I focus mainly on the one on the left-hand side. So as you can see, there's other options as well. But imagine probably some of you are thinking, that's a bit of a headache. How do I get around that? So yeah, we'll talk about some of the VAT registration options for distant sellers, particularly those who don't want to register locally for VAT, mainly for the reason I just mentioned, e-invoicing, real-time reporting, so on and so forth. But you still want to sell to your customers in those EU countries, and you still need to charge them their local VAT rate. So if you're if you're selling to customers in France, you still want to charge that local French rate. So this is where schemes like the one-stop shop and import one-stop shop come in. These schemes were created to kind of simplify the kind of VAT burden for businesses selling into the EU, so into the European Union, particularly for e-commerce businesses. So really importantly, they allow you to report and pay VAT for multiple EU countries, but through a single registration. So you only need to register in one country, say for example, France, and then you can kind of sell to all across the whole of the EU 27 countries without needing to register in those separate states. So yeah, there's also something called the non-union one-stop shop. So this is particularly for businesses who sit outside of the EU. So you might be a US-based business, a UK-based business, but you still want to sell into the EU and not kind of have that burden having to register in every single state. So this is called the non-union one-stop shop, and it's specifically for digital services. So if you're selling like ebooks, kind of software, so on and so forth, this is the one for you. And yeah, again, it allows non-EU businesses to register for VAT in just one EU country. So you're kind of having a kind of designated country that you'll kind of decide. So it might be Ireland, for example, and then you'll use the single one-stop registration to pay the VAT on all your EU digital sales. So it's one kind of monthly return instead of like 27. And then there's the import one-stop shop, and this is designed specifically for low-value goods under 150 euros. So if you're a business and you're selling to EU under 150 euros, this one's probably for you. So similar to the one-stop shop, it allows a business to charge and collect local VAT at the point of supply, and then yet again pay it through a single return. But these schemes ultimately reflect a broader recognition by tax authorities that global trade is essential, and that the VAT system needs to support it and not stand in its way. So I've obviously listed lots of different kind of compliance frameworks, but if you're like a distant seller, they do want to make it simple. They do want you to trade within the EU. Yeah, so one-stop shop and import one-stop shop, yeah, are there to kind of make cross-border selling easier while still ensuring you're compliant and collecting the right amount of VAT from your customers. Okay. So yeah, so just moving on to VAT in a digital aid, so ViDA. I'm sure some of you have heard of this. It's a kind of key kind of framework that's kind of driving the digitalization of tax within the European Union. So ViDA is a three-pillar roadmap that aims to modernise how VAT is reported and collected across the EU. The goal is to make the system more efficient, transparent, and better aligned with today's kind of digital economy and cross-border selling. But it's important to say that ViDA is not a single reform or deadline. It's a phased plan. It does start in 2025, but it's a phased plan, and that's being rolled out over the next kind of few years. And probably by around about 2030, 2031, all these kind of three pillars will be fully implemented. Yeah, so let's kind of touch upon what these pillars mean, because some of them will relate to your businesses, some won't. But yeah, just to kind of talk through, just to give you an understanding. So the first pillar focuses on platform economy rules. So this targets kind of like short-term accommodation rentals and passenger transport services, so Airbnb and Uber primarily. But under this current framework, the responsibility for charging, so at the moment, the responsibility for charging, remitting VAT often falls on the individual host or drivers. So many of whom are kind of small scale providers who fall below national VAT thresholds. So in this case, like a lot of the kind of where Uber and Airbnb exist, they're not paying VAT, which is obviously a loss for the tax authorities. But what ViDA is proposing to do is shift that to the platforms themselves. This means giving platforms such as like Airbnb and Uber, they'll become the deemed supplier and responsible for paying VAT. The second pillar relates to the one-stop shop scheme and our import one-stop shop scheme. So what I mentioned previously. So yeah, ViDA plans to extend these schemes, so it allows for a broader range of cross-border transactions, and it's not just limited to like B2C sales. So they're looking to expand what you can report on an OS and an iOS return, so making it easier for kind of cross-border sales and distant sellers selling into the EU. Finally, the third pillar is digital reporting requirements, but mainly this is e-invoicing, which we're now going to talk about. E-invoicing is massive. I know Will's going to talk about it. It's kind of a key part of the VAT framework and VAT kind of landscape at the moment. But as businesses expand globally, it's one of the biggest challenges and adapting to these different requirements. So as I mentioned at the start, it's like traditionally we used to see PDF invoices coming through on emails, but now there's a move to having systems in place that can accept structured real-time e-invoicing. And these invoices are often submitted to the tax authority before or at the same time the customer receives it. So e-invoicing is being rolled across the globe. I know I've focused a lot on the EU, but you can see there we've got like Saudi Arabia, for example. So this means that, it's not just a local issue, it's a very global issue. And business needs to be aware of the different formats, different systems, and different timelines that they need to comply with. So just focusing back within to the EU specifically. So through mandatory e-invoicing, it's kind of based around the ViDA reforms. And so even though they kind of, ViDA says they're not going to start till 2028, a lot of EU countries are kind of pushing before that. So for example, in Germany, from this year, so from January 2025, was the first phase of mandatory invoicing, and German businesses who are locally established must have systems in place to accept e-invoices as well. So even though EU-wide deadlines feel a bit distant, 2028, for companies who are doing business in Germany or anywhere else moving earlier, preparation really needs to start now. So I think it's important to understand, who is being affected by e-invoicing. So I just skip along. So firstly, just a second CPE question. So how has your business encountered e-invoicing, and if so, are they ready? So A, no, my business is not aware of e-invoicing. Yes, my business has a plan and the technology is ready. And then C, yes, we are still trying to understand what it means and how we will approach it.
As a reminder, you do need to answer at least 3 of the 4 poll questions in order to qualify for CPE credit and attend at least 50 minutes of the presentation today. So these will be popping up on your screen throughout. And let's take a look at the results as they come in. And I'm going to pass it off to Will for his piece of the presentation.
So this was just my slide just to mention about the kind of strategies you need to think about when it comes to e-invoicing. So like having unified strategy. So e-invoicing is rarely like a one and done project. So as you kind of venture into new markets, you kind of want to have a strategy in place that looks at kind of universally, so having a joined up strategy. But also you want a robust piece of technology as well, which Will's going to mention. But the kind of key thing which I want to kind of leave you with is that it's about developing strategies. So I mentioned a lot of different kind of VAT registration options, probably confused quite a few of you. So I apologise about that. But it's about having these strategies in place, which Will's going to talk through with the ease of technology that can support you and your business when it comes to managing VAT globally. So over to you, Will.
Great, thanks, Henry. So as mentioned by Henry, I'm now going to touch on how Avalara can help, how our VAT products that we have available are going to help you navigate through the VAT landscape. So at a really high level, before we jump into some more detail, if we start at the top, the first up is to identify that tax footprint. And then once that's been identified and using some of the methods that Henry's mentioned, the next step is that registration. So being able to understand what type of registration you need and where that needs to be. We have products that we can help you through that journey. Once set up with that registration, you're then able to start selling to your customers, to your different vendors that you have out there. And we have classification to ensure that the invoices are classified in the correct way. tax determination, as you're looking to expand globally, there are going to be different rates and rules that need to be considered. So getting that tax determination right up front before you then have the e-invoicing aspect. So we know that e-invoicing is expanding, it's coming as more and more mandates are brought in. So being able to have a scalable solution that can meet those mandates as they're coming through. And then the final piece of the puzzle is then the returns and reporting. So getting that summary return available to the tax authorities once you've carried out all of those the transactions with your customers at the end. So if we then look at the breadth of how this all comes together. So in the first aspect, you've got your company, your customers, and your vendors that you're transacting with through sales and purchases. And our core products and services are the foundation to make sure you do remain compliant. So our core offerings that help you stay compliant, we have the products that sit around calculation of taxes, which is our Avatax product. In business-to-business transactions, companies collect and validate exemption certificates, which is the US side of the equation that can help assist if there's the US aspect. But then we have the returns and e-invoicing. Now, one of the core elements of Avalara's strategy and our technology and how it can help is we have our core products and then we're supporting products underneath. So underneath those core offerings that we then have supporting products and integrations and APIs to be able to make it easier for us to integrate into your business, making that compliance simple and being able to have all that you need throughout that entire compliance journey. So as we look into a bit of a deep dive into each of those, we have products such as Avalara Tax Research that can help understand that footprint. We then are registrations products. So with around the VAT solution, our managed VAT reporting product can help guide you through the entire journey to understand where we need to have that registration. This also covers things like fiscal representation. And just to touch on fiscal representation a little bit here. So this is in some EU states, you are mandated, depending on where you're established, to have a fiscal representative in place. So this can often be seen in the EU, but also in other countries around the world where fiscal representative is needed, and Avalara can help you there. So we provide fiscal representation services for our customers that we can take you through the registrations process in order to get that established. We then have our classifications products. So Avalara item classification supports over 180 countries, ensuring that the goods are classified correctly up front before we then hit the tax determination. So when we have a look at our tax determination, there's over 48 billion Avatax API calls made by our customers in 2023, and that's growing year on year. We cover across just not only the US, but also the VAT and GST rules that are available in part of that the calculation to ensure that you get it right first time, to ensure that those invoices, when they're sent to customers, are accurate. Then there's the e-invoicing. So the next step in that compliance cycle, we have the e-invoicing reporting. As these mandates are coming out, we're increasing the support of this as those new mandates are rolled out ahead of time to make sure all of our customers remain compliant before the final step in the journey of the returns and reporting. Now, one of the big focuses here, it's not only the reporting, it's not only getting that return available. This is the final step. before it goes to the tax office. So as part of our returns and reporting solutions, we also include features around reporting and reconciliation to ensure that everything matches back to your source data. So back into your ERP and your general ledgers, that we have that reconciliation from the VAT returns or any of the supplementary reports that need to be submitted to the tax office. Over to a bit of a view across the world. So there is the EU member states that are covered, where we have some of the simplified regimes, but also expanding out into APAC and these additional jurisdictions where you may have customers as you're looking to expand globally. So we cover the VAT returns, and also just calling out here the additional supplemental files that are needed. That includes both PDF and the e-files to allow for faster submission to tax offices. So we help with that global message to be able to bring across all of the needs across compliance. So I just wanted to also now touch on those, back to those core offerings that we mentioned. And our view and our mission at Avalara is to be able to bring this into a platform and being able to have that end-to-end compliance across the journey. One of the things we hear from our customers, and we know through tax offices, that they're getting more granular data throughout that journey. And this is how we are looking to bring together our core solutions, integrate them across each other. So when you are carrying out each of the stages of the journey, there is always a feedback loop. There's always that reconciliation to go across. So within the calculation AvaTax product, this automates the VAT calculations globally. This ensures that we've got that real-time accuracy, it's compliance, and it reduces any administrative effort to be able to move forward. We then move on to the e-invoicing again. So here we have the e-invoicing that's been spoken about. We know this is coming. We know that the mandates are being rolled out across different member states, different use cases that we expect to see expanding over time. And then finally into our VAT reporting again. And just to touch a little bit more on that reporting solution. So we have two offerings today within the market. So we have a VAT reporting product, which is a tool that we license to our customers that allows them to manage that compliance in-house. So they are able to access the tool. They've got the knowledge on which returns are needed, the frequencies and those pieces. But if you don't necessarily have that expertise in-house, that's where our managed VAT returns product comes in. So we understand that expanding globally and the different legislation, the different rules, the different portals that are required for submission can add more burden to a business. And we can help take that away. So through the managed VAT reporting product, we can handle the interface with tax offices. We're able to submit the returns and allow you to outsource some of those compliance needs. Now, one of the integration points that we are looking at today and looking at expanding the coverage for is around taking the data from calculation at that source and ensuring that the downstream products have that same information available. So by integrating these products, we're able to help simplify integration and also be able to bring these products together to meet the needs of your compliance in different jurisdictions. So let's jump into one of the areas around different dynamics and the synergies that we can help with in the context of data integration. We do recognize that this is one of many, but this just to double down onto our data for the minute. So we know that the data can come from many places and often places dependent on those downstream solutions. For example, if a customer is using calculation determination to make sure we apply the correct VAT rate, making sure there's no undercharging, overcharging, or manual lookups, they already have enabled a data connection to make this happen. If a customer has learned that their invoices now need to be passed through an approved network in the correct format in real time for e-invoicing, that would be another connection. And then the same for live reporting. And we all know that these transactions for sales and purchases all need to flow onto a return. So what are we doing? So we're looking to improve the connectivity and synergies between our products. So where we have multiple integration points, our vision and view is to simplify this. So recognizing these global trends, we're looking across the entire portfolio to have a single connection to financial and invoicing systems. We're revisiting our existing integrations and working with partners to have a look at that supplementary data that's potentially needed by the other downstream products, and looking to simplify the way that our customers share this data with us. We will continue to make sure these products work in isolation, but we want to reduce the number of times you're having to send us the data for each solution. And by looking to improve that connectivity, we're going to be able to get better synergies between our products and facilitate further checks and balances across all of the transaction statuses to be able to then allow for better reconciliation and allow that data flow to move tightly across.
Okay. Yeah, we have our third CPE poll question. What would be your ideal approach to managing tax data across systems? And I'm going to bring that up on your screen. The options are: one integration point that handles all tax compliance processes, flexibility to manage and customize individual data flows between tools, a combination depending on geography and business unit, or not sure, still evaluating options. And I'm going to go to the results so we can see that coming in. And gentlemen, you can speak to that if you'd like to. Otherwise, we will move on to the next section.
That's good. Okay, so the final point that I'm going to touch on here is familiar customer challenge that we hear. So selling across multiple jurisdictions, online and offline, being able to consolidate that transactional data and preparing accurate, timely tax reports. It can become a lot, and we recognize that these different frequencies or the different tax offices, the different requirements can end up being overwhelming for businesses, and especially that expansion across new geographies can only add to this. So the view from Avalara and the aim is that we'll be looking to aggregate our data across the products and regions into a single view. And part of this is to have that single source, and by coming to a single platform, you'll be able to get the compliance, your compliance needs met, and plan for the future. So one of the big elements that we see is those changes that can often take place quite late in a filing cycle, or a tax office can issue a change, being able to adapt to that by looking for a technology partner such as Avalara. We've got you covered, and we've got that expansion as you look to grow your business for those additional use cases. We'll be able to help and ensure that you've got a solution that can grow with you. And as those legislation changes come about, we're able to help you navigate those changes.
All right, I think it is time for our fourth and final poll question. And that is, would you like to speak to an Avalara expert? As a reminder, you do need to answer 3 out of 4 questions to be eligible for CPE credit, and also attend 50 minutes of the presentation. And I'm going to turn it over to Henry now for Q&A.
Yeah, thanks, Will. Just I've had quite a few questions come through the Q&A chat. So I'm just going to kind of go through and answer those. So the first one, is it 10,000 euros per country? So that will be in reference to the EU distance seller threshold. So if you're selling into the EU, there is a threshold of 10,000 euros, and that is for all countries. So even if you just sell 10,000 euros into one country, you're then, from that transaction after that, you're liable to charge local VAT where that customer is located. So it's all countries, yeah, not per country. And then there's also a question, which was, is it correct that in some EU countries that VAT registration is mandatory once you are established? Yes, so mainly that is correct. So in some EU countries, once you're established, so VAT registration does become mandatory regardless of your turnover. So there's no kind of threshold in place. So a few examples, I mentioned Germany. As soon as you're established, VAT registration is mandatory. Similar for Poland, and also Italy and France as well. So yeah, it really depends on the country that you're in. There's also another specific question around about NetSuite. Yeah, again, this is worth having a conversation with like an Avalara expert, but we do have functionality and connectors available for within NetSuite for VAT calculation and also duty calculation as well, for both the UK, EU, and also globally as well. So there's Australia, Japan, or wherever, we can do that as well. So very interesting question here from Parissa. So if you're spending lots of money paying VAT, which is kind of what we don't really want, and expected sales did not come in yet, is it better to voluntarily register and actually claim back the VAT you paid? So this is a kind of multi-question here, really. The first bit does kind of constitute tax advice. There's different VAT schemes within the UK. You have something called a cash accounting scheme, which is kind of what it suggests really. You kind of pay your VAT to the tax authorities when you get paid by your customers or when you pay your suppliers. That's normally for kind of low value, like kind of smaller businesses who would benefit from that cash flow. So you can do that. But it depends on like your kind of turnover, whether you qualify for what we call cash accounting. But you can voluntarily register as well. So within the UK, there is a £90,000 threshold. So once you kind of reach that, you have to register, similar to like what we have like economic nexus in the US. So like in California, it's 500,000. If you go over that, you have to register. So similar to like that, but within the UK, it's 90,000. But what you often see a lot of businesses doing is they're incurring a lot of costs, but they're under £90,000 threshold, but they want to reclaim back the VAT on their costs. They might be like a new business who's incurring lots of costs, and yeah, they want to reclaim that VAT, so they'll voluntarily register. So yeah, it's also interesting, that point actually around the cash accounting scheme, because I've spoken about kind of local VAT registration, but there are different options within that as well. Yeah, Sam Wild asked about the Avalara integration with Sage Intacct. Yeah, again, worth having a conversation with a specialist here at Avalara. So we do support Sage Intacct. It's a little bit more complicated, that integration. But if you want, it does support VAT. But if you do want a conversation, it's worth having a conversation with one of our kind of solution engineers, such as myself, who can help you understand a little bit more. Will kindly asked, when are the ViDA, so VAT in the digital age, kind of expected to be implemented? So I mentioned that it's like a roadmap. It's taken a long time to get ViDA implemented. It was initially like a piece of legislation set out in, I think, 2022, and it only got ratified like this year. I think it was in March this year it finally got ratified, because it required all EU 27 countries to agree to it. And there was one particular country who were kind of quite resistant to it, but they finally agreed this year. So yeah, it's from 2028. So that would be the introduction of mandatory e-invoicing and digital reporting requirements. So we've spoken about mandatory invoicing and how it's going to be a big change in both like finance and kind of operations. So yeah, from 2028, all countries you will need to send and receive, if you're established there, send and receive e-invoices. But like I mentioned, there are some countries going earlier. So for Germany, you need to have if you're selling B2B, you need to have systems in place to do that. And also Belgium's kind of implementing it next year as well. But yeah, for like the platform economy and OS and iOS extensions, that's from 2028 as well. So yeah, Gary asked, are triangulation transactions allowed from outside the EU into EU countries? So what triangulation is this is where you kind of have three parties, and it's a simplification scheme. So triangulation is where you have kind of three parties. So for example, party A will be selling to party B, but it's party C who are actually shipping the goods. So it's like a kind of three-way kind of transaction. Triangulation is there to simplify it, so not every so sellers don't have to register in multiple states, and it's an EU scheme. So you have in order to qualify for triangulation, all the three countries have to be different. So yeah, 3 different EU countries, and they all have to have valid VAT registration numbers. And think about if you're based in the US, think of VAT registration numbers as similar kind of legal standing as like an exemption certificate. That is what exempts customers, well, businesses within the EU from having zero-rated tax, is having a valid VAT number. Is there a list you can provide that shows each threshold for every country? Yes, we can send that. It'll be on the EU website, but yeah, we can send that as well. And then, yeah, last question, is the EU country... So in this case, I would worth talking to a tax advisor, but in simple terms, if you are over the €10,000 limit, you are now expected to charge local VAT in that country. So yeah, as soon as you go over that limit, you'll need to start charging local VAT. Those first 10,000 are kind of like tax exempt. It's worth looking actually at some new rules that came out, where it actually allows you to have 100,000 euros kind of tax-free, but I believe that's for EU established businesses. But it's worth looking at new legislation that was implemented this year from January 2025, that is there to support kind of like distant sellers within the EU. So yeah, so if it's outside the EU, it's 10,000, but there are new rules that are up to 100,000 for particular sellers as well. So yeah. And I think, Regina, we're going to quickly touch back on slide 16, just kind of going back a few steps really, just to talk about e-invoicing, kind of hammer that home really, because I think that's kind of one of the main takeaways we kind of want to leave you today. So talking about e-invoicing and who is affected. So yeah, this slide here, just how to prepare really. I think all businesses would benefit from just working out what their e-invoicing exposure is. So if you are registered in the country, if you are locally registered, what is your exposure, and then therefore what should you be doing now to get kind of get yourself ready. So let's talk about firstly who is affected. So the first off, the main group impacted are the locally registered VAT companies, so where you have a local registration and e-invoicing is being introduced. So if you have a local registration, so a German VAT number, you'll likely be subject to these new January 2025 changes around e-invoicing requirements. But what if you're not registered in that country? So let's say you're a US business, you don't have a German VAT registration, but you're kind of just shipping across border and delivering remote services from abroad. In that case, you're not generally required to issue German invoices because it's tied to local VAT registrations. But you never know, you might kind of you might need to register locally, so it's worth thinking about. So I've kind of mentioned it's worth having like a unified strategy. So as more countries introduce e-invoicing requirements, and within the EU by 2028, it's expected that all countries can be kind of required to, well, all businesses in the EU are required to accept and issue e-invoices. But yeah, for businesses now, it's no longer a period, it's no longer to be considered just like a finance process. It's also like a regulatory and operations one as well. The main thing about e-invoicing is the quicker you implement the system, when those mandates come in, the quicker you'll be able to get paid from your customers. But yeah, what makes e-invoicing tricky is it's different formats, different systems, and in some cases, like you have to submit those invoices to tax authorities before they even go to your customer. So it's about having like a joined up approach, and we all spoke about how we have an e-invoicing tool to support businesses with that. But yeah, so e-invoicing is really kind of like a one and done project. It's not just about expanding into one new market, but setting yourself up for like the next 5. And we've spoken about the robust technology, but you want something that can integrate with your existing systems, automate where possible, and scale with you as you enter new markets. So yeah, a good piece of technology can take complex country-specific mandates, different, like for example, I remember Poland is a good example. They may require 240 different fields when it comes to e-invoicing. So, and that can differ a lot to other countries. So you want a system in place that can cause minimal disruption to your current ways of working. So whether you're kind of using SAP, NetSuite, Oracle, or whatever, you want something you can simply plug in and get going quickly. And yeah, when the e-invoicing is done right, it doesn't just keep you compliant, it does help you kind of streamline operations. You no longer have like PDFs and all that kind of formatting. It's just kind of structured data that you're sending to your customers. But yeah, that's kind of e-invoicing. It's a kind of really big topic, and I appreciate it's a lot. It feels like a large part of VAT compliance. But what we are seeing is more and more of our customers and more businesses reaching out to us around e-invoicing. So when you think about VAT, also think about e-invoicing as well. But yeah, over to you, Regina.
Great. Thank you so much for going back and giving us a little bit more information on that topic. We are out of time for today, but I did want to alert you to some upcoming webinars that you can check out at avalara.com/webinars. In addition, we have Avalara's customer conference. It's going on tour this year. You can check that out at events.avalara.com for details. And I just want to thank our speakers, Henry and Will, for joining us today. And thank you for joining us. And that concludes today's webinar.